If you're interested in the Taxpert Topslicer 2022 calculator, it's probably because you've been following the rather sorry saga of HMRC's incorrect calculation of top slicing relief over the last few years. And you'll know that I've personally been involved first in supporting Neville and Marina Silva in their attempt to stop HMRC's appeal to the upper tribunal in the Silva case. We were successful in that. And then I successfully took the judge's case, Sally Judges being executor of her late father's estate, to the first tier tribunal. And again, we were successful. Unfortunately, HMRC are not accepting that either of those judgments is binding on them. They're not accepting overpayment relief claims on the basis that practice generally prevailing applied up until the 11th of March 2020 budget announcement that changed the calculation more into line with what it should have been. And they've also not correctly interpreted all of the Finance Act 20 legislation in their latest calculator. So there is still an awful lot to play for. And that means that many agents will want to use this calculator to double check whether the calculations are correct or not. And I am wholly confident that I get it right, and I've been proved right, and HMRC get it wrong. First, we've got a number of tax years, and this version of the calculator can be used going back to 1718. That would be relevant if you've got an in-time overpayment relief claim for 1718. Of course, the deadline for that has expired now. It was 5th April 2022, but it can also be used for the current year. And the income elements can go in, as with our other calculators. You put in the client's various income figures. Let me just put in employment or pensions income of, say, 100,000, and I'll put in, I don't know, dividends of 25,000. I won't put in any other figures, but we can also put in reliefs, gift aid, pension contributions, etc. But for the chargeable event gains, you can see the figures are greyed out for non-UK chargeable event gains and for UK chargeable event gains, which are taxed slightly differently. Well, we put those in over here, and we can enter up to 8 different policy gains of each type, or you can combine the figures. But let's suppose that we've got here 125,000 as a policy gain where there's been a term of, let's say, 20 years. And I can see straight away that my calculation is the same as HMRC's. And that's what I would expect for the majority of cases now, where we're looking at 22, 23. If, however, I were to have chosen a different tax year, suppose that I go back to 21, 22, well, there again, I get the same figures, actually, so no difference there. And if I go back to 2021, now that was the tax year after the budget change. So again, I wouldn't expect a difference. And again, I've got no difference, so that's quite good. There are a number of cases where there would be differences. Go back to 1920, and actually the first point you'll notice is that it says beneath the tax year selection, if 11th of March 20 or later, select 2021. That's because for gains arising on or after 11th of March 20, the Finance Act 20 rules applied. But again, not again. In this case, I can see that there's a difference in the top slicing relief calculation of £4,000. I'm not going to bore you with going through where that difference arises, but believe me, as did the tribunal judges, HMRC get it wrong, I get it right. That taxpayer will be overcharged by £4,000 if we're looking at a 1920 calculation. And it does all depend so much on the combination of figures. I don't know what will happen. I can't tell unless I actually put in the figures. Let's drop that to 80,000. Does that make any difference? Blimey, I had no idea that was going to happen. But there you go. On that, the revenues calculation is only 4,000 of top slicing relief. The correct figure is 29,000. Think about PI claims. If you don't get this right, then you could be sued. And this calculator is worth a huge amount. By the way, all the work I've done on this in terms of supporting agents and clients and the two tribunals, I've done pro bono because I just want it to be right. We do make money selling this calculator. I'd encourage you to buy it. And if you've benefited from any of the work in terms of your own agents and clients, then I would encourage contributions to the tax charity Taxaid, particularly the Bridge the Gap campaign. Go online, you can contribute, make a donation through their Just Giving page. But that's it. And well, there are lots of workings. Let's just have a look at it here. And the workings are very detailed. These support what you would tell the revenue. So here you've got my calculation of top slicing relief, 29,000. It's based on the allocation of allowances down here. The revenues calculation, well, their figure allocates the allowances down here in a different way. And that's the reason why they only get 4,000, and they are wrong. So we've got full workings to back it up, and we can go back to whichever years we like. So there it is, that's the Topslicer calculator. And I'd strongly recommend that if you've got any clients with chargeable event gains, you do have a look at it. Oh, I will just add one thing. Let's just go back to 22-23. What we could also do is work out or use it as a planning aid. So if you know what the gains are going to be, you can work out what the marginal tax rates are going to be. On this one, for example, if I go back to 0, then the tax liability is just over 28,000. If I've got a policy that's run for 20 years, 28,000 is what we've got. If I cash in 10,000, I put it in the wrong, the second box there, let's go back to the top one. If I put in, say, a policy gain of 10,000, I might want to know what the tax is on that. Well, it goes up from 28,195 to 30,195. So that is a 20% tax rate, even though, is that right? Yes, it's 20% because we've got a notional tax credit there. If it were 50,000, then again, I would expect it to be, I don't know, is it, the figures get too complicated for me to do in my head. But anyway, you can use it as a planning aid to advise the client on what the tax liability will be if they cash in a single premium non-qualifying life policy.